No deal is better than a bad deal.
The more you know, the more you're exposed to the challenges you'll be facing, or the more you'll be exposed to the successes that are in line.
Ambitious goals are smart, but be realistic. I'm not telling you to not like shoot high, but maybe make that a 3-year goal as opposed to a 12-month goal.
Welcome to another episode of Ask the Multifamily Expert. And with me, I have Brooke. But before we start off, I would like to give us the background or foundation on what Ask the Multifamily Expert is all about. Ask the Multifamily Expert is an avenue for people to ask questions, or for we to ask questions to the experts or people that have very serious or good experience in multifamily space. Like I said, I started this because of how I started my multifamily journey. I had no access to people that could guide or direct me. So this is why we are bringing this to people, so that they can ask those very burning questions that you want directions. Remember, multifamily is not about reinventing the wheel. It's about just following what people are doing and following their guidance and doing it very well. So that is what it's all about. Before we dive into today's program, I would like to introduce any one of you that has not yet subscribed to our YouTube channel. Our YouTube channel is Blue Ocean Multifamily Group, and our Facebook channel is Blue Ocean Multifamily Group, and our Instagram is Blue Ocean _Multifamily Group. And why is this important? Because we believe that with the right content and direction, you will be able to start on your multifamily journey, and you will be able to get clarity on those things that were not initially clear to you. So this is why we are putting out all this content in those platforms, and it is absolutely free. So now, Ask the Multifamily Expert. With me, I have Brooke. Brooke is just a fantastic person. I remember when we decided to start syndication. So let me give you a background. We started multifamily as just two partners, and we're just doing it on our own as JVs. We didn't involve any other partners with us. But as time started going on, we started noticing that our funds were tapped out already. We needed to involve more people. And we got into the Michael Blanc community. And the first person I got attracted to or decided to speak with was Brooke. And I said, Brooke, see, I am new in this community. I have an accent. I don't know if they will accept me. I've been doing this for a while, but the community is new to me and all that. And she gave me guidance and said, no, Bibi, let's do this, do that. And before we knew, she started introducing me to some of my partners that I worked with, people like Tommy, Dee, even lenders that I've spoken with to do deals on. She's been such a resourceful person. And besides, if you look at the back, we have the same book. She's also she's a co-author of Real Women in Real Estate. I'm happy to be one of the first set of women that wrote this book alongside her. She brought it up with Migena, and we co-authored it with them, and it's such a beautiful one. So let me ask you to introduce yourself first before I say a little more about what today's event is all about.
Of course. Well, one, it's such an honor to be here, Bibi, and I'm so grateful to have you in my circle. And so, hey, y'all, my name is Brooke Ceballos Pinheiro. I live in North Dallas, Texas, recently moved from California. What a culture shock. I am a passive investor in 676 units out of Florida, active sponsor of 481 here in Texas, and a triple net. I am a publisher. I have a multifamily mentorship. And as Bibi so kindly advised, I was also one of the project managers and creator of Real Women in Real Estate, where we brought in all walks of life of women that were killing it in real estate. Because when I started my journey, I only saw one community and not very many men. And so, yeah, that's me in a nutshell.
Thank you so much, Brooke, for introducing yourself. Today's topic is mainly about building a roadmap, setting smart goals to scale your multifamily portfolio. This is a very, very interesting topic for me, and let me tell you why. Because some people, I've noticed, they don't really know the long-term vision or the short-term vision of why they are even in multifamilies. Some of us are in it because others are in it, or that is what is trending, or because they told us that we can get financial financial freedom from it. But I would like to say that multifamily is a personal thing. In short, real estate on its own is very personal, and it just depends on your goal and what you intend to achieve. I would like to say that multifamily is not for everyone. You can just do your normal fix and flip or do your vacation rental and you are fulfilling your goal. So that is why we are discussing really what is the roadmap. When do you think you've arrived, or what are the numbers that you need to get to for you to say, I am satisfied with doing multifamily? So these and many more things we'll be discussing, because we actually need to know what number is that freedom amount. What is it? At this point in time, you can't just be jumping up on any deal at any point in time or with anybody without understanding what your purpose is in this entire thing. So that's what we'll be discussing today. We'll be giving you a brief roadmap on how you can start your journey. If you've been doing it before now, you've never had an objective or a number in mind, maybe at the end of today, you would be able to sit down and have that conversation with yourself and say, okay, I'm not going to be investing as before any longer. So I'm going back to you, Brooke, and I will be asking you some few questions. So my first question to you is, and again, we have some people in the audience. If you want to ask any questions, please, you can put it in the chat or raise your hand and we'll bring you up. It's a question and answer section, so you can actually ask questions at any point in time of the event and we'll be here to guide you. So my first question to you is, can you briefly explain to us what SMART goals are and why they're essential in multifamily investing?
So SMART goals are, they're specific. You can measure these goals. You have the ability to achieve these goals. They are relevant to what you're trying to do, and they are time specific as well.
So how is it essential to multifamily investing? Why do people need to set SMART goals in multifamily investing?
Well, honestly, it's crazy for you not to do that, because then you're kind of shooting in the dark and you're flying by the seat of your pants, and you don't want to do that. Multifamily is a business and it needs to be treated as such, especially if you have investors involved, right? So for goals that we have in multifamily, I want to make sure that we're hitting our numbers as forecasted, right? So what does that look like? So if we look at specific numbers, majority of us want occupancy at above 90%, right? And we know that's achievable by covering, market. I know this market right now is a little rough. I think the average is like 85% right now, at least in the DFW area. However, we want to make sure that we are delivering on our promises. So are we at 90% occupancy, which is mostly, that's usually what our goal is. What about our cash on cash? Are we looking at 4%, 5%, 6%, right? And again, this goes back to what Bibi advised. It's based off your goal, right? Is the cost segregation percentages what, separates the depreciation part of it for a tax write-off. What does that look like? Because majority of us are in multifamily where we want cash flow. We want that quarterly drip, right? Some assets will pay you monthly. Mostly it's usually, quarterly. And how much of my tax bill can I errata or reduce? And so those numbers are huge, along with knowing what your numbers are for your property management and your asset management. So to kind of reiterate, if you don't have specific goals and you can't measure them, and how do you measure them? Well, you're having bi-weekly calls, maybe with your property management team, with your sponsors, you're having quarterly calls, and you're looking at, your EBITDA, which is like your earnings before taxes, depreciation, amortization, etc. Essentially, it's your profits, right? Your P&L. So you are on top of this with your partners. You're having calls. You're making sure that the numbers that you forecasted to your investors are on trend, or we are at trend. And if we're not, what's the probability that we can hit it by this number based off of our history or our area of expertise? I know that's a long answer, but there's so many numbers involved in multifamily, and it really depends on what your own personal goal is for that asset. Every deal, every asset is different. Not any deals are alike.
Yeah, so based on what you're saying, that means as an investor, you need to first of all think about it in this way. Do I want to be a limited partner, and do I want to be an active partner? That's the first question for you to answer. If you're able to get an answer to that I want to be a limited partner, because I know people that have offered them being active and they will tell you, no, I can't combine this with what I do on a day-to-day basis. So please, no, I'm okay being a limited partner. So that's the first question that, based on what Brooke is saying, that's the first question for you to answer. Do I want to be one, active or passive? So once you've understood that, Brooke is also saying you need to identify the number. So for me, let's say at the end end of 12 months, you want to get 500,000. So that means you now know the end goal. 500,000 is your number and you now plan towards it. That is a SMART goal she just outlined. The next question to you, Brooke, is how do you go about setting short-term and long-term SMART goals for your portfolio?
I do it so, well, I'll start with long-term goals. So I reverse engineer everything that I do. So how I go about doing my short-term and my long-term goals is those are aligned. So depending on what my long-term goals are, I look at that and I look backwards and I go, okay, so where do I need to be at in 5 years, 3 years, 1 year to hit that long-term goal? And I think of my goals on a daily, weekly, monthly, quarterly, annual basis. Okay. And so for example, let me just put my stuff out there. So my long-term goal, and I'll tell you what I'm doing right now as a short-term, examples are phenomenal, right? So long-term, my goal is to hit $1 million annually passively, which is 83,333 a month, I believe. So how do I intend to do that? And with the surplus, I will look to buying businesses. I will be looking at what our 4 daughters want to do with their life and get acquisitions or other endeavors that support that, right? And we'll go into the surplus up, over $1,000 passive. So now I'm looking, well, what does that look like? So now what I'm doing as of today, now I'm looking back, okay, what do I want to do the next year? So we'll step back a little bit. I am looking at smaller assets that I have a minimum of 25% of ownership over, because that increases my net worth. Okay. So right now I'm looking at smaller assets. I have more control, cash flow, clarity, net worth, etc. So what does that look like on a quarterly basis, right? How many deals and a weekly and a monthly? I kind of combine these sometimes. I have underwrote, for example, the last 12 to 14 days, 34 deals. Okay. I talk with my brokers and my debt people on a daily basis, almost every other day. My partners that are in this deal with me, and right now there's only 2 or 3, there's 2 of us spearheading this. Every day we are speaking. I underwrote this. What did this look like? And we're gutting it. Okay. And we're making sure that our goals, and let me pause for a moment. Your partnerships are so vital. When you're in the beginning of this, you need to make sure that your mission, vision, and values are aligned. Because when times get hard, and it will get hard, it's going to be hella hard. This is a blood, sweat, and tears endeavor. Okay. That you guys remember why you started. So on a daily basis, I am pulling, my husband's the hunter, right? So he has access to all of these sites for me, and I have taught him how to underwrite. He will underwrite and we will look at, the market, what it is right now, because you have to change your guys' underwriting to match the market. Okay. That was something you have to do consistently too. Where's the market quarterly, annually, etc. So back like in 2021 or 2022, we were looking at 90% occupancy, all the things. That's not happening right now, y'all. Now we're underwriting 85% occupancy, maybe 52 to 55% debt, and then a cap rate of like 5.5 to 6%. I mean, I'm doing that every single day, and it's based off the numbers of the assets. And so, how I do that is because I need accountability for myself. I have a planner, and we'll discuss this maybe a little bit later if we talk about tools, and it helps me keep my daily and weekly and quarterly goals aligned. Because if I want to be living off an annual income of $1 million passively, what does that look like? I'm going to buy smaller assets first, and then in 3 to 5 years, I'm selling those assets, and 70-80% of the profits will be invested in triple net along with a larger asset. Because long term, I love multifamily, but I also love triple net because which is land and building, and people like Taco Bell and AutoZone pay you money for rent with built-in bumps every 5 years. So I know that was a long answer to your question, but really you need to know long term, what is your goal and why are you doing it? For me, we have 4 daughters of color. I came from very humble beginnings, living off the system, broke, scarcity breeds abundance, right? I was a single mother at one point for a few years. And I want my daughters to see that their sex and their race and the color of their skin is going to propel you, because other people who look like you and look like us are going to want to follow you and see what you're doing, right? And not just one community. So that was a very round bow of an answer, but know what you want, reverse engineer it, look at my quarterly goals, how many LOIs, which are letter of intent to put on contract, how many LOIs have I submitted? And I have a spreadsheet and it tracks all the deals I submit, even if I lose, even if I like one deal, for example, right now, this developer wants 5.5 million for a deal that's only penciling 2.8 million because he's trying to recoup the cost. Not my problem. I can empathize, but not my problem. Even though we gave him an offer and he denied it, and I understand, I'm not going to budge on my numbers, but I am going to track the deal. So I hope that answered your question. Write your goals down, put them in a planner, set your alarms, reverse engineer, know what you want, have a mission, vision, and values, and make sure that your partners are on that same mission.
Yes. So guys, let me tell you a little about Brooke. Brooke is a general partner. So she's going to answer our questions as a general partner. So I'm an advocate for limited partners.
And passive. I do both.
I
started as passive.
So I'm going to speak on for people that like to invest as limited partners, how you can set your very smart goals as a limited partner. So for example, if you want to achieve, let's say your goal per year is maybe $50,000 or let's say $35,000 on cash flow, because there are many different forms of how you can make money with multifamily. So cash flow is just one of it. The second one is appreciation, and the third one is tax depreciation. So it just depends on what you want. So for cash flow, let's assume you say I want to be making 50,000 every year as cash flow. Just like what Brooke said, you reverse engineer whatever it is you want. You want 50,000. That means you should be involved in about 7 or 8 deals every year. That means you need to invest in such, maybe at an average of 7% average cash on cash. So if you invest in 7 deals a year at an average of 7%, you have about $49,000 every year. So that's what I'm saying. You want to achieve an amount, for example, 50,000, you need to invest in deals that will give you at minimum of 7% average cash on cash. 7% average cash on cash will give you about 3,500 for every deal. When you do the math, you should be investing in about 7 deals. I might be wrong with the calculation, but you understand the idea. You know your amount, you reverse engineer how many deals should I be investing in a year to get to that amount. And the beautiful part of what Brooke mentioned again, the partners are very important. You don't want to invest in deals that they tell you it's 7, but at the end you see 1% or nothing at all. You want to invest with people that have track records, that have done this over and over again, that understand their projections. You understand their projections and they are realistic. That is where the smart goals come in play. So Brooke, I'll be asking you the next question. So now I am the advocate for the passive investors today.
Okay.
So how do you measure the success of a smart goal in multifamily industry? When do you know that you've arrived or you're achieving your goal in multifamily?
For me, I am looking at what I forecasted to my investors. So if I look at so I have different goals from a personal perspective and a business perspective. So as a passive investor, how am I managing SMART goals for multifamily? I am looking at the occupancy rate. Am I getting this at 90%? Am I giving my investors the 6 to 7% return or whatever that was promised, right? Am I having enough cash flow to honor that 80 to 20% of and that 70-30 split of the rents that we share, because I have properly put money in the bank for CapEx like roof and HVAC or whatnot, right? I'm also looking at the execution of our business plan with my asset management team and my property management team to ensure those numbers are aligned. So those are how I'm measuring that, the obtainable goals and how they're time bound. And then I am consistently communicating with my investors, not only on, the quarterly webinars that we do, but approximately every 2 to 3 weeks. And Bibi and I are connected in this way. She's one of my phenomenal investors as well, and she can vouch for this. It's usually every 2 to 3 weeks, like on a Friday, maybe a Monday morning, I check in with them just saying, hey, how are you? Happy birthday, anything I can to ensure that those doors are open. Now, for new multifamily, investors, I think it's important, one, to first educate yourself, on to be dangerous. You don't need to know everything, but you need to know enough to be a little bit dangerous, right? So listen to the podcast, listen to Bibi, Michael Blanc, all these phenomenal people. But most foremost, look at the operators. Make sure you're working with somebody like, and trust, okay? And make sure that you are looking, as she alluded to, the track record. So SMART goals from an investor perspective for me is consistent, clear, concise communication, checking in with them, even if it's nothing to do with the deal, to know, because a lot of my business partners are also my friends. A lot of
Yeah.
my investors, we celebrate the birthdays, we go out to lunch together, right? I want them to be able to communicate with me. And I need to make sure that we're honoring their numbers. So the cash on cash, did they get their K1s, right? So when you invest, there's a cost segregation that is done. So for example, one of my investments, there's $50,000 in it. Well, we got a tax credit of over $7,000, which helped wipe out our bill. So when I'm looking at smart goals from a personal perspective and an investor perspective, it's really a lot alike. We're aligned because I care and want the same things my investors do. Because if my investors didn't want the tax write-off or the higher cash flow, or they're okay with a 5-year hold as opposed to a 3-year hold, or an A property that's not a value add, that doesn't need a remodel, then we shouldn't be on this deal together, right? Because our mission and vision and values for this business is not aligned. So I hope that answered your question.
Of course. You should know you you always answer my questions. So
I
for
did it or
those
I
of
did not.
you did,
Oh,
obviously you did.
okay.
Yes,
Sorry.
for those
Sometimes it's
of
like
you
squirrel.
that yeah. So, Brooke, my next question to you is what role? Because for the last 3 years, we've seen the market playing significant role in our SMART goals. Some of it we're not able to achieve because of the market. Not because we didn't set SMART goals, but because of the market. So my question to you is, what role does market research play in setting effective SMART goals for multifamily investing?
That is massive. You need to know your market, you guys. It ensures your goals are realistic and data driven. Okay. It helps you mitigate risks. It aligns your exit strategy with market trends, right? Nobody wants to lose money. I mean, I know that's a risk that we take as investors and operators. However, when you know your market research, it's going to help you with everything I just said. It makes your goals and numbers realistic. It's data driven. It's not some fluff like so many people selling stuff on performa and coulda, woulda, shoulda in a distressed situation. Cut the fluff, cut the performa. Know an operating memorandum or an OM that a broker is providing to you is a perfect scenario, right? Make sure you're looking at assets as is and actuals and buy off actuals, not performa. Don't even underwrite with performa at all, okay? And know your market and your demographic, right? For example, a property that me and my team toured just last week, this asset is surrounded by $4 million homes, beautiful, beautiful cultural area of Dallas. However, the demographic within this apartment community, a lot of people were on Section 8 and the operating memorandum and everybody was coaching the rents to be up at market rents. But if you don't look at the numbers and you don't look at what a 5-7 mile radius of other apartments are charging and what their amenities are, and if you're on a Section 8, they're capped. So you can't say, I'm going to get a $1,500 market rent when the people across the street have all these amenities and you don't, and you're a 3-story building with no elevators and half the people are on Section 8. That's not going to work. And that information is not voluntarily provided. So know your market, and that way you don't overpay, because every asset you acquire is a business and you have to lead with your exit strategy while mitigating risk. So it is imperative that your feet on the street, boots on the ground, knowing I think DFW, what is it? The average per door is like 125K to 200, depending on the location, if it's an ABC asset. And that's part of demographics. You can't go right now, stop trying to underwrite that you're going to raise rents. We're just not in the market to raise rents right now. A lot of us are in the market trying to retain our 85% occupancy, And so I think that answered your question, but know the market.
Yes, no, you really need to know the market. So as a limited partner investor or as a passive investor, one of the things you need to understand in setting SMART goals when you are doing your market research. For me, for example, I'm investing in 2 markets. One is the PA market and one is the Texas market. And let me tell you why I'm in those 2 markets. It's very intentional because it fits my goal. My goal is I want cash flow, and my other goal is I want appreciation. Now, do both fit those criteria? Yes, they do, but on different capacity. So now my PA fits more of cash cash flow. So I get properties that are owned by Pops and Mars in that kind of market. And guess what? Pops and Mars relatively do not catch up with the market. Not because they don't want to, but because they owe a little on those properties and they're already making money. So they don't always want to push rent. So we buy properties that have low rent and increase it. In that way, we're able to get significant cash flow. So that is a strategy for choosing that market. For Texas, Texas is a growing market. We're seeing migration, not just migration from the border. We're seeing migration from people living different states because of the policies in Texas. The place is just rising. All my neighbors are all from California, so.
Hey,
So,
sorry, not sorry. Love us or
I
hate us.
know. Even you too. You came from California. I came from
I
California.
know. Sometimes I hesitate and I'm like, you know what? Forget it. Like, hello,
Exactly. Yeah.
you guys will be
Yeah.
all right. Cali people are cool.
Yes, we're cool. Investing in Texas is more for us about appreciation because one, these properties have the tendency to appreciate because of the market. The market is really driving demand, driving population and all that. So as a passive investor, you need to determine what kind of market do you want to give your monies to? What markets are the sponsors investing in? What is your goal? Do you want more of cash flow or equity? Because I know some investors that prefer appreciation. They make a lot of money. They're not in there for cash flow. They're in there for either tax benefit or for appreciation. So if you fall in those categories, market research will determine how you can align your goal and where you should be investing in and who you should be investing in based on how they align with your long-term goal. So that's that. The next one is, this is very funny because let me tell you why this is a funny question, is because I was very ambitious when I started and I will laugh at myself. Hold on, back up. So the next question is, how do you balance ambition and visibility when setting goals for growth in your multifamily portfolio? So let me tell you the story before you answer my question. Brooke, I started my multifamily saying that I was going to close on 1,000 deal in 1 year. Did you hear that?
Yes.
I said that without even understanding that a lot of money is involved for you to close 1,000 deal. I was so ambitious. I want to close on 1,000 deal. And I remember on that call, some people were like, interesting. Okay. you know, that was very ambitious. But was it feasible? No. At that time, because one, I was just starting up. There were a lot of limiting factors. But right now, is it achievable? Yes, it is. But at that time, no. So based on what I just said now, how do you align your ambition, balance up your ambition with feasibility? Because we need to start doing that at this point.
Yeah. So first I'm going to answer your question and then I'm going to tell you a short story, which is pretty much in line with yours. And my mentor had to chin check me a little bit. And so you achieve this balance of that type of an alignment by you're analyzing your past performances, right? And I started out as a passive investor before I became an operator. And I feel that's an important first step because I learned what I did like and what I didn't like. And was my focus getting more tax write-offs, more K1s? Was my priority more cash flow? Or was I, because as a passive investor, you're not really you get a little bit of ownership, but it's not a lot, right? Usually, depending on how it works. But learning from my mistakes, so let me pause again. So looking at past performance. So I analyzed as a passive investor, I studied the market. I also wanted to learn from my past mistakes, from partnerships and me trying to go after deals on my own with my own team, while also recognizing my financial capacity. You don't need to be a multimillionaire. You don't need your own money. But then when it comes to investors, the time to have those conversations to build that relationship is like a year ago, 2 years ago. You don't just out of the water, out of the gates, start asking people for their money and I'm going to give these advices to you guys, which is the same thing what I struggled with in the beginning, that the questions that were asked of me was, Brooke, how much liquidity does the team have? I want to avoid a capital call. Sometimes they happen, but if we can reduce that probability of a capital call, we want to look at the liquidity. How many people have gone full cycle? So make sure you're not trying to bring other people on the come up with you because then it's a bunch of people in a boat and it's drowning. You need at least one person minimum that has gone full cycle that you can leverage that experience. And 3, interview other investors that have invested with this operator. So when I was going into this, they wanted to know, okay, Brooke, what of your investors can I speak with? I want to see your flow. 2, how much liquidity does this operation team have, or how much have you already raised? And 3, who are the people that, like, what is their track record, right? And if you don't have those things, it's important to be introduced to the people who do. Okay. So make sure you show up and build relationships and if you're on a webinar, show your face, because I can tell you right now, I'm not going to partner or bring somebody up that I'm a broke bread with you. I haven't met you. You don't even show your face. You're hiding behind something. And on social media, like, come on, put yourself out there. You guys, I know it's hard, but let's do it. So to go back to what Bibi said, this goes back to having a SMART goal, like what we discussed earlier, which is specific, measurable, achievable, relevant, and time bound. When I first started, I had my team. My background is sales, marketing, negotiations out of corporate. This is just another sales job. So I was very ambitious. I was like, you know what? My first year, I want to get at least 100 units. So I was at 1,000 units, but like, I want at least 100 units.
Yeah.
And however, I was pissed because it actually took me 18 months. And luckily, I mean, it was a large asset. But when I spoke with my mentor about this, he's like, Brooke, first of all, when you set goals, make sure there's something that majority of the variables are what you can control. Okay. Whether it's your mental, your physical, your spiritual, your education, showing up, right? And building this network and whatnot, because there's too many variables in the market, and partnerships and LOIs and competitions, because multifamily is relationship based. And if I know Bibi and she's selling her asset and I'm going to ping her on the side, I have a win over you because I know her, right? So that being said, ambitious goals are smart, but be realistic. I'm not telling you to not like shoot high, but maybe make that a 3-year goal as opposed to a 12-month goal and work your way backwards, and focus first on your education, being a passive investor, do a financial audit. And I almost called you Vina. Why did I call you almost Vina? Miss Vina Jetty, big shout out. She'll be on a guest on the.
She'll be our guest on that day.
But Bibi made a comment about, holy crap, I just lost my train of thought. You made a comment about something and I wanted to elaborate on it, and now I just lost my train of thought. Dang
okay,
it.
Once you remember, just
come
speak
to me later.
Yes, it's good. Yeah, so we need to start setting ambitious but very realistic goals. I'm a very ambitious person. I like to push myself to a limit, but it must be very realistic. It's going to be my highest level of being realistic and all that. And what will help you do that to balance up your ambition to feasibility is more of education, because the more you know, the more you're exposed to the challenges you'll be facing, or the more you'll be exposed to the successes that are in line. Because the more successes you have, you want to drive at it, you want to do more. If you're aware of the challenges that will happen, you'll be aware and try to see how you can mitigate or even eradicate some of those challenges, and now realign your goal and say, I said 1,000 based on the way the economy is. Will people really have enough money for me to fund a 1,000 deal? You want to put that into a right perspective, and education will give you that kind of information. And the other question you'll be asking, I want to close on 1,000 deal. Is it a seller's market or a buyer's market at this point? If it's a buyer's market, the probability is I can get those properties. Or if it's a seller's market, that means I might be buying properties that are very high in the market. Like what we saw happening 2 years ago. Some people were pencils down. They were not buying properties because they were high up in the market and all that. So these are things that you need to consider when setting your very ambitious goals. Let it be ambitious but very visible and all that. My next question, we have 2 more questions today. The audience are just saying thank you. Nobody's asking any question yet. If you have questions to ask, please do. My second to the last question to you is, can you talk about a time when a goal didn't go as planned? I have that a lot. And how were you able to adjust to stay on track? As a multifamily investor, we've had goals that were set out that did not work out. Or were they plan A, plan B, plan C? Yeah, so Brooke, have you ever had any goal that you planned but did not go as planned, and how were you able to adjust for it to come back on track?
Where do I start? Oh my God.
No,
there's
there's
so many, you guys, and the name of the game is pivot, and pivot some more. Okay, that is the name of the game, and don't take things sensitive about this. A real clear example that comes. Okay, let me see. I need to focus. So I think I will focus on a portfolio that was a couple years ago in Texas. And this goes back again as another lesson, you guys. Do not buy assets sight unseen. When you're looking online and you're looking at stuff, it looks beautiful and pretty, okay? When we got there in person, so there's a few different issues. One of the issues was a partnership who wanted to progress because our attorney was gone, without an attorney reviewing the PSA. And I will not do that. I will not submit an LOI. And sometimes I get very aggressive when it comes to certain things. And that's one thing.
For the sake of the audience, what's the PSA? say so that they know
My
what you're saying?
apology. So a purchase sales agreement, because this particular asset that we were looking at, there was a couple, there was a few, but I'll lead with two, which the first lesson is be very close with your partners, break bread with them, get to know their morals and ethics and values, right? Make sure that's aligned. That was my fault. I trusted, but didn't check enough receipts. So the first hiccup we had was we were awarded the deal. We had the PSA. Every purchase sales agreement, you need to have an attorney review. Words do not hold up in a court of law, okay? So they do not. And I used to work for criminal law and family law in my 20s, okay, for a while. And so as I'm looking at all of this, our attorney wasn't really available. So I tag teamed somebody else for a second and I'm partnering with them. And then I wanted my attorney to review and one of the partners wanted to submit and sign and progress. It became a very big argument, disagreement, which ended up leading to me firing this individual off my team, which is a completely different story of its own. So the first lesson is I had a lot of pressure from 4 or 5 different people who wanted to close a deal so bad because they had not followed through with this broker on previous deals. So they felt the pressure, but a lot of the things in the contract was not aligned with what we verbally discussed. And I never will progress a legal contractual agreement with the portfolio without having my lawyer come in to break this down in English, because some of these terms that they allude to.
English, the lingo.
Yeah, completely different. And then when we got there to look at the asset, they were guiding us to different parts of things that don't trust the brokers. Like I have a couple good brokers, probably 2 or 3 in Dallas that I really love, and I don't play. You guys come a dime a dozen. So just be honest and forthcoming. One of these brokers who I now have a list of people who I will not work with, from PMs to contractors, etc. And they kept trying to keep us away from an area, and I didn't understand why. To make a long story short, above the apartments, the cars are right here. If you went through the corner of the carport, the electrical was hanging down above the cars. There was water coming out from a different side. It was a lawsuit waiting to happen. And so we got so far. And what is the lesson here? Because she asked me, what was the hiccup that you had? You guys, I flew from California. The first 3 years or so of my journey, I was constantly flying from California. I never would get or invest in an asset like I didn't walk or tour myself. So the problem was I paid for the flights. I did all this stuff. I had people I trusted who put their names on this, and this was phenomenal. And I had to be the one person that had to push back and no, we're not doing this. And I had the bulk of the investors. I had a lot more capital. I had a 6-figure corporate job. I was making a shit ton of money. Excuse my language. And the lesson was do not trust the brokers. They are your friend, but they represent the seller. That's the bottom line. Make sure you walk the perimeter all levels. Have a checkoff list. You're taking notes, you're taking pictures, you're doing video, okay? So you can recall things. 2, if in fact you get awarded a deal after submitting a letter of intent to buy and you get a purchase sales agreement, I don't give a crap who the people on your team think they are, or they think that they can speak that legal jargon. You get an attorney to review that. That is legally binding on you, okay? And it can go to court. So I know that was something that I had to walk away, and it pissed off a few people. I lost, I want to say, probably 4 relationships who are still in the space. We see each other, we're respectable, but never ever sacrifice your morals, ethics, and values. Okay.
Yeah,
always
like
walk the effing property. Never move forward without a legal consult to look at that contract. And never, ever, if something does not feel right, do not be afraid. Do not be afraid to use your voice, because they were really upset at me for walking away. And it's like, hello, I just came from California, a week from my family, airfare, hotel, lodging, food, all of this shit. And I'm having to walk away because you guys want to progress. And there's too many red flags. Just don't be a punching bag. Don't be so excited to take down your own deal if you choose to transition from a passive to an active. And this goes back to knowing your operators. Too many operators out there paint this beautiful picture, and like they're so deep in the weeds, like they're just so, even their websites, like one of these people that I partnered with that looked like they had all these units. Where I messed up was they're all residential units, but the website had all these apartments, but they had acquired thousands of residential units, sold and flipped those. And the website was very misleading. So trust, but check receipts. Never moral ethics values, always have a lawyer and walk. No deal is better than a bad deal.
Thank you so much, Brooke. You just said it. What I picked from what you said is know when to back out, know when to walk away. For the fact that you spent those money for your hotel flights and all that did not still make you do the deal. You decided that there were too many red flags. I'll walk away. So that's one thing. Strategy for you when you are not achieving your goal is it might be a red flag, and for you to know when to just say, I'm done. I'm not doing it any longer.
That's hard, especially when you have
It's
red
hard.
flags.
Like last year, we underwrote too many deals and I walked away from so many, especially during the due diligence period. I went through the due diligence period. We spent money because due diligence is not cheap. We spend money because we always involve third-party vendors. And doing that will cost you money and it's kind of staring at you at the face when things don't go right. Should I just manage the issues or should I just walk away? But because of integrity and because you know what this can do to you and your investors, the way for you to mitigate, because it's not going as planned, is for you to just walk away. That is a good strategy I've used over and over and over again. And it might be for you to pivot, like what Brooke said again. That's why we always have multiple strategies. For exiting, we have multiple exit strategy. If this does not work, what do? I can do this. So for us, we got a deal last year. We closed on it in December. We're actually under contract for that deal in July. 184 units. It was an assumable loan. Guys, very good deal. 4.98% assumable loan. But when we were underwriting, we underwrote the deal to also take into cognizance if we go to take a new debt, we were not able to assume what would that look like at what interest rate, looking at the market. So we underwrote it again at taking a new debt at 7%. So the deal worked on both. So we already had from the beginning two different exit strategy. One, to assume it. Two, to take a new debt at an increased interest rate. Would the deal still work? Yes, it did. Another way you can mitigate your strategy is start early. At the beginning, look at other options. If this go wrong, what available option? And if there are no available options, please take a walk, fly away. Don't do it and all that. So for us, we had other available option because we started it at the beginning. We noticed that this deal could also work as a new debt. And guess what? We're not able to do the assumable loan. The lender said we're going to close in 2025, February. And our investors are already giving us their money to invest, said we needed to close 2024. So what did we do? We went to plan B. So that was how we were able to mitigate the risk. And guess what? We've done the underwriting at the beginning. So we pivoted, and even when the interest rate went up, we were still good because we underwrote it at 7. So starting up well at the beginning, taking cognizance of all the scenarios that can happen, can give you options on how you can pivot, limiting your risk. So that is all we have for today. We have a lot of questions, but I really enjoyed having this conversation with you, Brooke. Before we go, I would like you to tell the audience what is Brooke up to right now and how can they reach you?
Man, what a loaded question, but I'll keep it tight. So one,
Yeah.
I have two focuses right now, other than, acquisition. One, I'm part of Entrepreneur of Impact. And so I'll give you the link to vote for me. Voting ends on the 30th. What does that mean? It's for entrepreneurs out there that are purpose driven and what our goal is. So for example, I could win $25,000, a mentorship with Damon John, and an article in Forbes magazine. And with the money, a portion of that is building La Escuela de Ceballos Pinheiro. There is a school in Guatemala. I sponsor Nina Sofia in Guatemala. They only get a 7th grade education. So a portion of that money is actually going to Guatemala to build a school to get them further educated. And then the other part is for us. We're a family of 6. So we want to go to Puerto Rico, Bayamon, to visit family. We haven't been there in a while. And we want to go visit our family there for a family trip because all of our money's been going into the business and I owe my family a trip. And so she'll send you the link. Yeah, so that is a focus because that's a short-term focus. And then of course,
can you say it on your social media platform? What's your social media platform?
Anywhere you go, you can go on Instagram and you'll see the link is there. I'm the most active. So Brooklyn, BROOKLYNN 0719. So that is my big focus right now.
Okay. Can you repeat it again for people that are trying to get that? How can they search on you? It's on LinkedIn, right? As well?
Correct. So it's on LinkedIn. It's also also on my Instagram page. It's on my Facebook. So that link is everywhere. It's just not on TikTok because I can't put it on. It's fine. It's whatever. So that is a short-term play. But for something else, I'm also trying to, on the back end, I'm focusing on the publishing company. So giving people voices that normally would not. Bibi can vouch for this. It's not like a standard publishing. You have bi-weekly calls with me to get your story out. I'm guiding you. We're getting you on a stage. You're coming into an author community. All of the things to help guide you so you're not on your own. So that is my long-term focus, as well as getting more people, getting their voices and their stories out there to inspire others. So I appreciate you.
Thank you so much, Brooke, for taking out this time to speaking with us, speaking with the audience. Audience, I'm really happy to have you. I hope you enjoyed it. But if you want a fuller package of this, because it's not a 40 minutes conversation, it's something about your life and you need to start it now. Don't forget to follow us on our social media platform, which is Blue Ocean Multifamily Group on Facebook and Blue Ocean Multifamily Group on YouTube. And on Instagram is Blue Ocean_Multifamily Group. I look forward to seeing every one of you again. Thank you all and have a wonderful day.
Bye, y'all.